get really good bankers, I think you need experience. Think about investing in the relationship. Think about what is good for the clients.
Positioning here is a key strategic mission for private wealth management.
So our first question will be a message to you, Rémy, if you don't mind, rather than Rudy. So it is interesting today, Rémy, that many private banks are beginning to prioritize the Gulf and Middle East now in a way they never did previously. We see some of your Swiss colleagues, they've opened up offices here in the region, they're looking at the area seriously, but you guys have been here for a while, so why is this region suddenly becoming a priority for so many competitors?
Yeah, good afternoon, Yuri. Good afternoon, everybody. Look, we've been here for 15 years almost, so it's nothing new. The value proposition in an organization is to be like a pioneer and explore opportunities. We could see clearly a long time ago that demographics would prevail in the emerging markets, being 100 million more people every year on the planet, 1 billion every 10 years, would build a solid franchise here around. There is wealth creation. We can identify these trends clearly from 5 to 7% in all emerging markets. And the good point is that investable assets in these emerging markets are much higher than in developed markets. I think when you come in a region like the Middle East, you have a strategy. It's in terms of positioning also, the Middle East is offering proximity to the Eastern Europe, to Africa, as you mentioned before. And we have always had a strong conviction that the Middle East would, over the years, not only because the Arab countries are 380 million people today, but also in the future with these demographic trends, that we always believe that positioning here is a key strategic mission for private wealth management. Yeah.
And Christine, we see banks in Asia developing a strategy for non-resident Indians and global Chinese families. Is this what you're doing in Dubai as well? Is this an extension of that strategy, or did it perhaps originate here in Dubai before it went to Asia?
Actually, we have, at UBS, we have 3 centers for the NRI business. It's in London, in Singapore, and in Dubai, but I have to say our biggest book is here. And that has to do with the fact that, well, there is a large community, and as Rémy was saying earlier, there is not only a lot of banks, but also a lot of investors that are discovering this region and are using it as their booking hub and their trading hub. So I wouldn't really say that it expanded from Dubai to the other areas, but it is definitely, for us at least, it's probably one of our largest booking centers for NRIs.
So, and if I can move on to Bahren Shaari, because it's interesting how Christine was describing that they're essentially the same segments that are being attacked or targeted in different regions. Bahren, Singapore, where your home country was a country that sprung from a swamp, basically, and reclaimed land and was disparagingly described by Malaysia as the little red dot, which was then taken on as a badge of honor by Singaporeans. But it became one of the world's most productive, richest countries. Do you see any parallels here in Dubai in the development of the financial center?
Yeah, I think, good afternoon, everyone. Definitely so. I think clearly both Dubai and Singapore are hubs on a fast-growing region. I think that's very important. I think with strong infrastructure, good rule of law, good governance, it's an attraction for talented people to use both Singapore and Dubai as a base. And clearly wealth management plays a very important part in that growth. So there's many similarities between Dubai and Singapore in that regard.
But one of the main challenges you have in Singapore is the shortage of qualified private bankers. It leads to this situation where each bank, instead of training its own people, they just take 10 from another bank, they offer them slightly more money. And we heard a panel earlier on saying this whole area in the Middle East, there's not enough investment in education, particularly in the financial services sector. Is that a challenge for you to recruit staff in this area? And maybe the other panelists can come in after you as well.
I think it's a challenge not only in Dubai, I think it's a challenge in all other financial centers. To get really good bankers, I think you need experience. You need to see, you have been through the market cycle. But I think for bankers to really, who are passionate about banking, I think the key point is really think about your clients. Don't think about moving from one place to another. Think about investing in the relationship. Think about what is good for the clients. And I think banks owe it to the employees as well to invest in the growth of the individual, to provide them with a platform that make it easier for them to do their business, to provide the necessary client experience. I think these are things that we want to do. One other thing that we have to do better is to provide bankers with the tools to make them more productive. So bankers now generally handle about 30 to 40 relationships. But if you have technology, you have good support and infrastructure, I believe you can manage maybe 90 to 100 clients, right? Because bankers are now spending too much time on the administrative, on the onboarding, on the compliance and everything else. And that's not helping bankers in delivering what is really important to the clients.
And before, I'm just going to bring in Nick, but before that, Crystal wanted to come in on that as well.
Yeah, I wanted to say, we've been here for over 50 years. And for us, this has always been an important region. Actually, we love the region. And we have doubled our team on the ground in the last few years. And just to go back to how difficult it is to find the right talent, last year, we increased our team in WM, so in wealth management, by 30%. And we want to do the same thing this year again, but it is so difficult to find the right talent. So this is actually what is really not stopping us, but making it difficult to grow. We would love to grow faster because we believe in the region. Having been here for over 50 years, we've accompanied a few families for 3 to 4 generations. So we have had the luxury to really get to know the people in the region extremely well. And we need more talent to be able to grow faster than what you're currently growing.
And I'm going to quickly bring in, don't worry, I've got plenty to ask you, Nick, but Rémy, you've got some experience of this battle for talent as well.
I think the one size does not fit all, and the complexity of wealth management is asking for a group of people working around a few very important topics. It's about wealth preservation, it's about succession planning, is about digitalization. And I think the profiles of the bankers in the years to come is a little bit like, is disruptive as much as the car industry is. So we're still going to have a car running with tires. There is no car going without tires. But the car is changing, completely. And it's the same for the watch industry. It's still looking at the time, but the watch composition is changing. And I think the profiles the skills will require a lot of agility in the IT, in the understanding the process of robotization of advice for a good stake of what we call the public-private banking services. But we can come back to this topic later.
We will come back very shortly. Yeah. I just wanted to bring in Nick, Nick, because Remy's talking about the tires, but for the Islamic banks, it's not just the tires, it's the whole engine. I mean, when you look at staff, you have to have the right scholars in place, the right Islamic scholars, and that's really what defines a good Islamic bank, is the quality of the Sharia board. But every Islamic bank I speak to said that they've got the best board. We've got the best scholars. They went to this university. They did the research on this. They did a degree on this. They worked with this mentor. And every Islamic bank says that they're the best. And how what should investors be looking for when they're assessing which Islamic bank will manage money according to their principles and in a way that the whole package, including the returns, the whole holistic value of their portfolio is maximized?
Right. Bismillahirrahmanirrahim. Assalamu alaikum. Good afternoon. All banks will just claim that they have the best Sharia board. That's for sure. There are a few things that investors can look at. One is look for Sharia board that has the right combination of Sharia qualified experts and also banking professionals or experts in finance and law. Don't just look at Sharia board with Sharia qualified experts. You need a combination of both, as long as the board has majority Sharia qualified advisors, because that's the key. Number two, look at institutions with clear development plans for the Sharia board, because things are changing very rapidly. Sharia board needs to know what is the definition of blockchain, for example, and they need to have that continuous plan. And this is normally advertised or disclosed in their annual reports. Number three, I would say look for institutions that gives enough decision-making power to the Sharia board. So they have to rank at par with the board of directors, for example. And the numbers in the Sharia board has to be enough for them to make informed decision. A two-man Sharia board could actually give you an alarm. More than that, and with a combination of experts in finance and law, will give you more comfort.
And do you see parallels between Islamic investing and socially responsible ESG investing?
Right, good question. Yes, they are both of them have the same spirit. Islamic investment and SRIs are trying to achieve the same objective, which is preventing of harm and promoting benefits. There are few things that we have to work on to make these two converge. For example, the SRIs, when it comes to financing SRIs, the requirements to have Islamic financing is not a must, but for Islamic investment, it's a must. In Islamic financing, in Islamic investments, there are few screenings that we have to go through. For example, composition of dividends purification, composition of music, entertainment, which does not exist in SRI. And in Islamic investment as well, there are certain investments which are approved by Sharia board, but not considered as ethical or falls under SRI. For example, coal-fired power plant. It's recognized as Sharia investments, but not typically an investment which is approved by SRIs. So we have to work on these few things. The objectives are the same, promoting benefits and preventing harm, but few things we have to work on to make both common and parallel. Yeah.
And naturally, on these issues, we have different views between the generations, between those who created the wealth, those of the wealth that's being passed on to, the new entrepreneurial generation. And we have a question here about this whole family business landscape, which I'd like to ask Christine about the region with respect to succession planning, something very close to the hearts of many families, but I think particularly in this region. What do you think the outlook is about succession planning for you and wealth preservation in a region where wealth is particularly concentrated in the hands of families?
Well, I think, and this comes to the heart of wealth management in the sense that if you really want to be a good partner for your client, then it's not only looking at their investments and how they invest their money, but it's really about how you can help them plan for the next generation and how you can make sure that they can pass on their wealth in such a way that it's there for the long term and for the next generation. So for those families that run, companies, corporates or businesses, what we see in this region very often, actually to some 90 to 95%, the businesses are passed on within the family, and so you need to help the family to find the right way on how to pass it on. Whereas in Western Europe, we very often see that actually they don't pass it on within the family. They rather either sell it or get somebody more professional to come in and manage the business for the family. That we don't see that much here. So it's really much more about tradition, keeping the business in the family.
So
and
there's a reluctance to bring in people from outside the families to advise on assets, would you say?
No, I don't think it's so much the reluctance. I think it's a little bit maybe, but much more about the pride of having built something and wanting to pass it on and wanting to keep it. And I think there it is very important that you build a very tight relationship to the family, because you need to understand how the family thinks and what the values of the families are to be able to advise them properly on how to do the succession planning for the businesses.
And Crystal's made some very interesting points there about succession planning, but the asset allocation model as well, that's also changing between generations, Rémy. We can look at the new generation potentially being more interested in in more concentrated portfolios that make an impact. And the traditional stocks, the Swiss stocks, the Novartis, the Richmond, the Swatch, they're no longer the bread and butter stocks of the portfolio. How is that whole dynamic of the portfolio holdings changing?
I think you have a range of products. So many clients still need to trade or love to trade. You have the derivative structured product, the Forex box, all this integrated, what we call the public-private banking services. You have access online. But the wealthy individuals today, they love to understand and get access to less liquid, but returning higher revenues over the years, like private equity, like real estate, investment trusts, like IPO, pre-IPO business. So I think the asset allocation basically is not changing, but it depends how you define the profile with the client. If you have a conservative client today, a conservative client should have at least 70% of fixed income return. And how do you get return today? Apart if you commit in the dollar or BB bonds, you get no return. And the wealth management and wealth preservation concept is to beat inflation. It's just to beat inflation. So how do you beat inflation today? And what we are seeing in single stocks, Apple and Kraft Heinz included, over the last 3 weeks, and as a front attack to Warren Buffett, the guru, both lost 40% or 30% with goodwill impairment, with challenging business models. So you cannot go and preserve the wealth in single stocks. That's what has to change. Bond market, Middle East, we were just assessing shortly a few weeks ago. A client called me, said, look, there is this Damac bond, 658 2023 maturity. It's at 86. Can you check? Is there any risk behind? We checked, and I called him back. I said, there is a bond maturing in April from the same issuer, and it's a 99 point something, so I don't feel any risk on this bond. Well, that's an advice on a private investor, you know. That's very simple, this job. But at the end of the day, we take huge responsibility, and the asset allocation is 90% of the performance over the time. But the new generation is really challenging the old, straightforward business model with single stocks. We go more in trends, infrastructure trends, environmental trends, people aging, like changing lifestyle trends and so on. And we try to find the jewels in this economy, those growing faster than average, with always a risk that anyone has to take a goodwill impairment and they go back like down the scale and you don't have a clear explanation what is happening. And it's all about trust at the end of the day. If you trust the management, if you trust the long view and the capability to generate cash flow, I think that you can survive. Being a good company is a company that's caring for the shareholders, for the client, and for the people working in the company. But a good company is a company that pays a dividend or buy back the shares out of free cash flow and not out of borrowings. And this makes a huge difference. And that's what we call value, and that's what we recommend to our clients to check every time they invest in the real value of the investment.
And I've got a huge number of questions coming from the audience about the private banking business model related to what you've both been saying. But if you don't mind, I'd like to put some of these questions too, because the audience are very keen to share these. And a lot of them are concerned about how regulation affects the model. And so, Crystal, I'd like to ask you the whole common reporting standards debate, how will that affect Dubai as a financial center and its free zones? And other people are asking, how does FATCA CRS, what does it mean for the future of private and Swiss banks that operate in this region? Somebody else has said, look, the UAE is on a blacklist, on a European blacklist. How will that affect the business that is done here with clients? So we've got a very general concern from clients in this region about dealing with Swiss private banks.
Well, as I said earlier, for us, this is an important region. We've been investing and we will continue to invest. When we look at let's say the framework under which we can do business here, we've gotten to know the local regulator very well, and I have to say it is somebody that's extremely professional, but they understand business, and they've nearly become quasi a partner in developing our business here on the ground. And I think as long as we keep doing this, but still being very, tough, because they are very tough. But at the end of the day, Dubai is not on an island. So if they want to be part of a global, let's say a global business, no matter in which industry, you need to follow certain standards. So even if some regulatory requirements do not apply here, but they might apply somewhere else, for us as global Swiss banks, we have to make sure that we somehow roll them out on a global basis. And what helps here is size. So, because scale matters. At the end of the day, everything that regulation is doing currently, they're not always making banks safer, just, in brackets, but they are definitely adding costs to, how we do business. And so size matters, because the bigger you are, the easier maybe it is to absorb those costs. And therefore, we don't really see that as a competitive disadvantage.
And if I can bring in Bahren from the Bank of Singapore. Many questions here about dealing with private banks, and people aren't satisfied in this room with the service they're getting from private banks, and many are worried about geopolitical risks, and they're saying that their banks don't look at these enough when they deal with their family, when they give them investment advice, when they look at them as a customer. What's from your point of view, Bahren, why do you think the private banking model might be slightly deficient in addressing these geopolitical risks?
I think it's important when we operate in any market. I think first thing we have to be very clear which are the regions and which are the markets that we want to operate in. And then you have to develop the depth, the understanding of the market. So if you are going to cover the GCC, we're going to cover Africa, then you must be operating in a location that have enough expertise, enough talents to understand not only the demographic, the industries, but also the geopolitics in terms of sensitivities, in terms of the cultural differences. I think those are important skill sets that bankers need. And for that, you need to be operating on the ground in that location. So for us, we are very selective. We are not going to be a global bank with offices all over the world because we will never have enough talent, enough expertise to be able to develop the depth in all these markets. And also you will increase the risk of doing business because if you don't have the people on the ground, you don't have the people who understand the market, you're going to get into trouble. So it's better to focus on a few, deliver a good service. So I think that should be the model that for us, that is the model that has worked for us, and I think that's the model that we're going to continue going forward.
And also with the Sharia banking, we've got some dissatisfaction with the type of services people are getting. There's a couple of questions about that. One of them says some of the principles of Sharia compliant banking should be easy access and no correlation with the interest rates. However, neither seems to be the case.
Right. In that manner, right, there's been a lot of debate on using benchmark as the using conventional benchmark as a return for Islamic finance. It's allowable under Sharia, but to cut things short, the principles are there, but most likely, we need to do a lot more awareness, because I think awareness is not enough. We need to equip our salespeople on the core principles of Islamic finance, so that these are explained more carefully and more sharply to the investors. I think that the issue is not about the Islamic principles, it's how we explained it to our investors. Yeah.
And in terms of, we talked earlier about the recruitment and finding the right staff to deal with all of these issues, and you mentioned the robotics and AI, Rémy, and I'd like to ask Crystal, again, looking at some of the issues our attendees are concerned with today, are bankers available that have the knowledge in artificial intelligence, in big data, in these new innovations when you're seeking to recruit them from the market?
Well, the question is, what do you need artificial intelligence for? So is it going to be the individual client advisor that has to be the master of the data? I actually don't think so, because it really has to be like the bank that through its tools uses the data appropriately to give ideas to the client advisor, assuming that the client advisor obviously knows, or the relationship manager knows the clients. But it's not that you're going to have each relationship manager becoming an expert on big data and on robotics, but it is really the way you use those tools to screen your portfolios, to make processes more lean, more simple, to make it easier for the client to access your services. And I think if any of the banks isn't making any progress there, then I guess we are going to really lose out on in the market. The question really is, what is it that is going to make us banks as banks going forward? Because when we see who is currently trying to get into banking services from other industries, I think we also need to make sure that we differentiate ourselves and we clearly define what is it that in the eyes of a client makes us a bank and gives them service that they're willing to pay for. And not everything we do today is probably going to survive within the banks and will probably be offered, by others.
But in this region, in particular, the banks do not seem to be popular. You speak to people in Asia, in Europe, they speak more highly of the banks. I've seen private bankers come to these events in Dubai before and get very short shrift from the families who treat them almost as persona non grata, and these are not, they try to sell us structured products, they don't have our interests at heart. And you hear that in Europe, but not in the same vehement fashion. Why do we hear that more in this region than we do in in other regions?
Well, I don't think banks are, I mean, I haven't found a place in the world where people would say, oh, great, I have 2 hours free time this afternoon, I'm going to see my banker. That doesn't happen, right? So the walk to the bank for many people is like the walk to the dentist. It's not something that they really like and they would do instead of going shopping or drive a car or something. So I think it's really the moment clients realize that you're actually adding value. I'll give an example. We just ran a couple of events where we are trying to bring clients together and allow them to network. We are bringing them expertise in terms of robotics and blockchain because that's what really adding value to them. The times of where you just simply talked about the performance of your portfolio, if you define yourselves as a bank by doing that, I think you're really losing out. There's so much more that the client wants these days and should be asking for, and that we as banks, if we do it properly, can offer.
I'd like to ask Rémy, again, looking at these business models and what the banks have to offer. I mean, you've been through several cycles, and some commentators say, in this region in particular, this is the most concerning operating environment today, that more so than we had in the 1970s oil crisis with Sheikh Yamani being kidnapped, the 2 Gulf Wars and the Dubai debt crisis of 2009. What are your feelings? Is that the feedback you get from families, that this is the most concerning operating environment you've seen?
No, going back to 50 years ago, talking about the 70s, I mean, the first, when you have to regulate an organization, you create a network. The Middle East have been very smart in creating a huge network. They were the first one buying real estate in Europe. I was traveling to Kuwait to some locations. I say, why the hell are they buying a hotel business in Germany, in France? And they were the first to understand the diversification model. Today, the Sukuk business is above 300 billion. So Middle East has gained a lot of credibility. This is not hope, it's true, it's a reality. Now you have also indexed funds that take some equity portions in their investment, emerging market funds. And over the years, I tell you, demographics will prevail, and discussions with the families, it's about trust. We have to look at the liquidity of the investment. You know, the problem is, I have had a few occasions to share with clients over the last 40 years and say, honestly, why do you have a relationship with a private bank? Why should I need it? And my only honest answer is that because you want your assets to be liquid in the next 48 hours. Otherwise, you run your business. You know your risk in your own business. And it's very interesting because the clients, when they take a dive in their own business, it's maybe sometimes hard to swallow, especially when it comes from the cut-in orders and you are a big supplier of a large company. But at the same time, they understand the rationale behind. Our responsibility is to explain the rationale as much as we can, because nobody has a crystal ball. But I think the population will continue to grow. We had to address this topic a few days ago. The United States, they will be completely squeezed. The workforce is very short now, but the population will grow to 420 million in the next 25 years. Here, population will grow, but the problem in the Middle East is to put 60 million of young people to work in the next 10 years. That's a topic. And how do we integrate this in any kind of segment, industrial segment, wealth creation, financial services is another topic. But I think we can have today, because first of all, the population, the managers of the family offices and the wealthy families have had their children studying. They all have a master's degree. The Indian NRI population here is highly educated, you know. So the benchmark is as good here as it is in Germany, in the US. Sometimes we have also to realize 40, 50 years ago, nobody would clearly understand what a transaction, forex, structured product, wealth diversification was about. But today, everybody understands, and you go in any meeting room, you have CNN, CNBC on the walls. So that's not what the client expects from us. They expect some value proposition, which is explaining the rationale, the trends, and also training, because we have many opportunities to train the children of our clients in our organization.
So we're all still going to be here next year. That's the main message that you're giving us. I'm getting a message also from my bosses upstairs to get off the stage, otherwise I won't be here next year. So thank you very much. We've had some fantastic questions from the audience, which you shared with our panel. And thank you, Nick, Bahren, Crystal, Rémy, for your insightful comments and for letting the discussion flow and for honestly answering my questions. Ladies and gentlemen, please put your hands together for our panelists.
Thank you.